Today we have Russo, who is the founder of Defiant Media, moderating a fantastic panel of DeFi leaders. I'll let Cami introduce the rest of our panel, but I do want to remind everyone that this is a live discussion, so we'll be taking questions throughout the session. Cami will be setting some time aside throughout to monitor Q&A. So feel free to write in using the Q&A function at the bottom of your screens. We can keep this as interactive as possible. And again, thank you so much for joining us today. I will now turn things over to Cami to kick off our discussion.
Thanks so much, Elisa. And thank you so much, Crypto Compare, for inviting me and us to this panel. Welcome, everyone. Should be a good one. And what an awesome discussion we just heard with Sam. Really interesting stuff, and we should touch on some of that coming up. So I will introduce our panelists. We have Emilio Frangela from Aave. He's protocol lead. Aave is DeFi lending protocol. Lex Sokolin, global fintech co-head at ConsenSys. ConsenSys is a venture studio for Ethereum-based startups. Jeremy Musighi, I hope I'm not butchering your name, Jeremy, head of growth at Balancer Labs, a DeFi portfolio manager and decentralized exchange. Jeremy was just chatting that he's having some connection issues. So hopefully he'll be able to stay on, but we might see him drop off. So don't get scared. And then Ryan Breen, founder and CEO of Alkemi, which built infrastructure to connect CeFi to DeFi. So welcome, everyone. So I want to start, the topic of this panel is DeFi in 2021, where we are and what's next. So DeFi is obviously this ecosystem of financial applications built on blockchain technology that is on its way, I would say, or at least very much trying to replace the traditional financial system and Fintech as we know it. But the reality is that 99% of the world now today is using Fintech applications and the traditional financial firms to deal with their money and financial needs. But we all kind of have this sense that Fintech is kind of stuck, that it hasn't really innovated much in the past, I don't know, couple of decades even. And so I wanted to start with this great quote by Lex. He said, mobile neobanks and robo-advisors have been putting Scotch tape on traditional securities for a while, layering beautiful pie charts and price lines on your phone screen. But this is like Spotify selling physical records or Netflix mailing you video cassettes. What comes next is broad-based distribution of regular financial use cases powered by computational blockchain rails. So literally everyone into their phones, like blockchain into people's phones. So I wanted to get kind of your thoughts on this. Is this true? Has there actually been no innovation in Fintech right now? What are your thoughts? Like, if we can start kind of from the old guard to the new guard? What is Fintech doing right now? And maybe like since this is your code, maybe you can start and kind of expand on that.
Absolutely, and thank you so much for both using that as the prompt and to Crypto Compare for having all of us here. I've used this frame a bit in the past, so apologies to anybody who's heard me position it. But I think it's, in all cases, it's definitely rhetoric. It's a rhetorical frame. So it won't be 100% accurate, but it is in its spirit accurate. And I think I share Sam's view on having a big target, and I think if you look at the financial services industry, that's a 20% of GDP target, so I think we can go from 5 to 20. And then within that industry, there are manufacturers, there are people that make stuff, and then there are distributors, there are people that sell stuff. And so large institutional capital markets or depository banks or underwriters of loans or insurance companies, the organizations that take in money and capital and do some sort of risk transformation to it, those are the factories of the stuff. And then there's lots of distributors, there's lots of people who sell it. And in the past, the selling of the stuff was done by financial advisors and people in bank branches, right? You to go get a loan, you go into a bank branch to talk to a human being in the year 5000 BC or something like that. And that has been the target of most fintech transformation. Not all of it. There's a lot of fintech that's doing business process optimization and automating decision making and blah blah blah. But those companies tend to be $100 million, $500 million companies. If you look at the really chunky fintech stuff, and we now have many examples. We have the 40 billion Robinhood IPO with $1 billion of revenue. We have the Revolut numbers with 300 million of revenue and 15 million users. We've got the Chime numbers. We have every single SPAC under the sun, from eToro to Dave to MoneyLion. And so we see how that sausage is made. And the way that the sausage is made is a beautiful experience, that thing that we need to build as DeFi products, and then API connectivity into traditional banking and investment services. And so I think that's fantastic in getting people used to living their financial lives digitally on their phone, in communities, in conversations, in driven by meme investing or driven by trying to get your paycheck earlier. All this stuff is fantastic, but it all anchors into I can give you 10 companies which intermediate all financial technology. The core banking platforms of FIS, Jack Henry, and so on, the institutional capital markets platforms of the stock exchanges, for investment and wealth management, the custodian platforms and portfolio management platforms that underpin most asset management. And this is the glue that blockchain just takes out. And especially programmable blockchain, because it makes generic the software, meaning you can write software for any asset class. Anyway, I'm kind of getting long in the tooth here, but the main point is that fintech is already sitting there today with 50 to 100 million users of people who are not necessarily crypto users. And it's not necessarily, it's not just flipping on the button to connect to DeFi, but it's right there. It's already API first and it's already available. And so, I think for me, one of the largest levers we're going to see is for the fintech apps to really distribute DeFi product. And that's going to be the kind of the next leg of expansion for our industry.
Super interesting. Right. You're saying that most of the innovation happening in fintech right now is kind of on the consumer facing side of things, like how to distribute these financial services to users. So they've all developed these like beautiful experiences, but in the end, kind of the railing behind these experiences has remained the same for many, many years. And that's exactly what DeFi is rebuilding. So now kind of the next step is how to connect those two sides. And I think, Ryan, you're especially well positioned to talk about this. So what's next here? Like what's missing for these two sides to communicate better?
Yeah, I think it comes down to, there are some kind of compliance requirements on the traditional fintech side, and that don't really, there's not an interface on the DeFi side to really kind of meet those requirements, meaning like KYC checks, AML checks, stuff that financial institutions and businesses require to operate on. So I think for for us to be able to kind of advance and be able to kind of connect these two worlds, that standards and bridges are going to have to be developed to allow for the kind of open API connectivity, API first connectivity to actually be able to tap into DeFi that satisfies these kind of regulatory requirements and restraints that the businesses need.
So Jeremy or Emilio, from kind of the DeFi builders side of things, do you think this will be the way to connect with fintech, like a more like regulation friendly side of DeFi, like doing KYC, like I don't know, like checking all those boxes that regulators would want to see before bringing this stuff to the mainstream? Do you agree with that, or does DeFi maybe live on a separate ecosystem and just like fintech is on its kind of one side and DeFi just like goes and does like its own thing in kind of this parallel ecosystem? Yeah, curious to know your thoughts. Whoever wants to go first.
Jeremy, do you want to go first?
No, go ahead.
Yeah. Okay. So let's start with the idea that, of course, as Ryan was saying before, like there are some specific requirements that fintech companies have to actually being able to interact with financial systems, right? So anti-money laundering, KYC, then validations are pretty mandatory for them, which essentially it's quite, if you will, quite a big roadblock right now for institutions and fintech to actually enter the DeFi space. At the same time, what I believe is, I think that at the end of the day, like the union between the fintech space and DeFi space will actually happen somewhere in the middle. You know, I think like the DeFi space requires new forms of regulation that like the current form of regulations that are applied to classic fintech and to the railways, if you will, of finance as we know right now, they are not completely fully applicable to DeFi protocols. So at least I hope that at some point, like the connection between the classical financial world and fintech companies on top, and actually what we are building on DeFi will be somewhere in the middle, where DeFi somehow acknowledges that there is this other aspect of finance that cannot like actually interact with DeFi protocols as they are working right now, and at the same time regulations and like the old financial system recognizes these very powerful primitives that we are building that cannot most likely be classified under the conventional regulatory framework that there is right now. This is what I hope and I think we will see in the future.
So you think regulators will have to adapt to DeFi, and maybe a new framework will emerge, as you think DeFi doesn't really fit into the current structures?
That's my hope. Like that's my hope. If we can achieve a point where a regulation is actually able to cover the DeFi without actually kind of giving away all the innovation that DeFi is bringing and that will bring in the future, then that is the best I think we can hope for.
Got it. What do you think, Jeremy?
Yes, I agree with what Emilio is saying, and I would add that I think from the DeFi builders' perspective, probably, I mean, there are a few driving forces, but one very large one is wanting to respond to market demand. There are large institutional players that can make a very large impact in the total growth or liquidity of a DeFi protocol. And in order for them to participate, there are regulatory hurdles that need to be resolved. So I think that teams in the space are seeing those opportunities, and they don't want to ignore those. So you might see like more and more protocols that are kind of building out some like regulated version of their platform so that they can like participate in that market. And I think in general, like as regulations continue to, or as they become more clear and as they are like more explicit, then DeFi teams will have more of an understanding of like what they need to do in order to keep their business sustainable and to keep the thing growing. So uncertainty is a big factor, but I think when you have two sides that really want to get together, they'll find a way, and I think they are finding a way. You have the fintech and institutional side that wants to be more involved in DeFi. They see the benefits, they see the efficiency, they see the yields, and they don't want to leave that on the table. And on the other side, you have DeFi protocols seeing that there's a lot of capital and a lot of resources that are wanting to enter the space, and they don't want to leave that on the table either.
Yeah, there's this need of making the two worlds meet, but it's like they're not talking in the same language yet, both like technologically and also on the regulatory side. And Ryan was raising a great point in internally, which I'll remind participants to please drop your questions in the Q&A. So what Breen was asking is about kind of regulatory Legos, like compliant composability. Like DeFi works on these money Legos because it's built on open source and like all these different protocols plug into each other. Maybe, do you guys think there's a way of having like different regulatory sectors? Like maybe there can be like a completely open, non-regulated side of DeFi, and then there's like a separate side of it that's like more regulated, as like a third side of it that's like more for institutions, or maybe it's like fragmented according to like geographies. I'm not exactly sure how that would look or that would work, or if that like goes against kind of the very idea of DeFi in the first place. Like I think what's cool about this it's that anyone can access it. So I don't know if like we want to have these like silos again. But it's an interesting question. What do you guys think?
I think we're gonna look at this moment as like such a wonderful utopian moment, and we're gonna be super wistful about how we all felt now. And DeFi will be everywhere and boring and integrated and not novel at some point. But I think for those that remember where we are, we're going to potentially regret letting go of some of the kind of the ideals that the space started from. And there's nothing you can do. It's just sort of reality hitting the world. But I'm reminded of people who were involved in the early internet, who wrote a lot of utopian thinking in the 80s and 90s before the 2000s brought Google login and Facebook login all over the web to create these gates. And I feel like there's a pretty good chance we're going to be seeing gates as part of the negotiation between sovereign nations, and what regulators have to do in order to do consumer protection and so on. But that it will create the splintering, and the splintering is familiar to us. Like we've seen it. For those of you that do remember that kind of the wall gardens pop up, I feel like that feels like what the potential downside of what could happen could be like that. But I think as long as we come back to the ideals that people are expressing now, and that the distinctions and sort of the gates that are being created are really arbitrary. They're about power. They're about society. They're not about technology. As long as some portion of that thread survives, I feel like there's a chance that it will overcome in the end.
Yeah, we'll see what happens. But yeah, I think if we're taking kind of the very early shoots, like, and maybe Emilia, you can talk about this, but like Aave's pro product for institutions. I know there's like others in the works that are similar to this, like a more like KYC version of different protocols. We're already starting to see versions of this, of like a more segmented DeFi. Yeah, Emilia, do you have thoughts on that?
Like you say, Camila, unfortunately, I cannot yet really talk about that. What I can talk about is that like this product that everyone almost knows that is coming, essentially is like the result of months of research in mostly not really on the technical side, but more on the compliance and like essentially how to make things work, which was pretty interesting because like to me as a builder, it gave like a different perspective, like more insights on how the actual institutional world actually works. And what I can say is that in my opinion, the interesting part regarding the product when it will be launched will be what the role of the Aave governance will be, because even though, as almost everyone knows, everyone that follows Aave knows, like the product will be more oriented towards a certain category of users that have certain requirements in terms of participation. The Aave governance will still have a quite important role, which I think is still very cool. It's probably the first of its kind experiment in this field, and I'm really curious to see how it will play out in the next months.
Yeah. Jeremy, how is Balancer planning on integrating with either with fintech or doing something similar to what Aave is doing, and maybe building products that are specific to institutions?
Yeah, so far, institutional players have been building on Balancer, using Balancer to build like structured investment products such as index funds, and letting Balancer act as the DeFi backend, the mullet, the DeFi on the back and the CeFi on the front kind of model. There are certainly more organizations that would like to be using Balancer's functionality, but are kind of handcuffed because of compliance issues. And yeah, that's kind of an ongoing question that we will look to answer. So I don't have like a specific plan to share with you at this point.
Got it. Okay. I wanted to share a question that came in the audience. So there's an audience member who is a blockchain securities lawyer, and he says, I don't think DeFi lives on a separate legal system. Where exactly is the separate legal system? Yeah, like what? I think it's a valid question, because we are kind of in this space, like assuming that you're interacting with wallets and like non-custodial wallets without giving out information. And I think there's this assumption by DeFi builders and users that it's all good, like as long as kind of everything is non-custodial and protocols aren't using aren't handling user funds. But yeah, like where is it that kind of regulation and DeFi touch? Like, is it fair to assume that it's like a separate legal system? I don't know, like maybe, or yeah, or Ryan.
Yeah, I mean, it's tricky. I mean, I wouldn't necessarily say it's like a separate legal system necessarily, but it's kind of like a different world because, you know, in DeFi, you have decentralized governance and DAOs. And, you know, from a legal perspective, or just looking at like enforcement of these things, when you don't have a central custodian or a company necessarily at the center of it all, once it's kind of launched and fully decentralized, how can you, you know, give sanctions or enforce different things if you know, the current legal systems that we have now, I mean, how do they seize funds? How do they stop it? Who do they go after? So that, I think that creates a kind of big challenge, and that's where I'd say is maybe they're just in two different worlds, right? So I think that's the biggest challenge in the space right now.
I'll hop in with an attempt at something of a rhetorical answer because we're all so serious and this is a DeFi conversation. Like everyone's got their real faces on, nobody's pixelated or anything. So the first point is like trying to really understand where that question is coming from. And I think there's this presumption still, and it's a real bummer that this presumption is there, which is that some sort of that the activity happening in DeFi is in some sense more criminal or less kosher, or however you want to put it, or the activity in crypto is in some way less high quality than the types of financial activity that happens generally between human beings. And I think there's no evidence of this claim. Like this is things that people have hallucinated because they think the kids are crazy and get off my lawn. But it's the evidence is not there. And if you want really data-backed version of this, take a look at the research put out by Chainalysis and CipherTrace and other companies that literally scan the blockchain data record and understand transaction flows and understand that you can actually account for what kind of money goes where and so on. And on average, the illicit activity on chain is no worse than in the traditional world. And by the way, Deutsche Bank and Capital One are for sure way better at facilitating money laundering than Bitcoin. So just kind of want to lay that first brick down. I'd say the second point is if you give the argument that you do want global transactions, you do want to enable people from all over the world to access financial services in new ways, and for ConsenSys, we've got MetaMask, which now has 8 million monthly average users, and we see the footprint of where people are trading and where people are saving. And it's literally every single country in the world that people are using these services. And so, you're starting from a point where the question is, well, in what jurisdiction, who does what? If you're an American lawyer, you might be concerned about securities trading initiated by American citizens or offerings of securities to American citizens from some unlicensed jurisdiction or unlicensed firm with unregistered securities. And that might be a narrow question you ask, but in the same way that, the Chinese government has no business, let's say, censoring the consumption of American media, similarly, the American government has no business censoring financial services in Africa or in some parts of Asia. And so I think it becomes this really complicated jigsaw puzzle. And it is anchored in the jurisdictions of where people are doing business, but they're doing business in ways that have, as was said previously, is very novel and never done before with this flow, at this rate, with this speed, with this kind of geographic distribution. And so I'll end with just a reminder that in the mid-2000s, when Napster came out, the music industry sued a whole bunch of teenagers and tried to put them in jail for sharing MP3s. And, you know, in history's eye, that's not a great look for the record labels, and they deserved in large part what they got as an emotional response from the population. And I think we're in the same place right now. Of course, the stakes are, you know, 1,000 times larger, but we do have prior examples of what can happen.
I mean, it's such an interesting discussion because, you know, the question there is money different from information? And what we're seeing here is that for the first time, money is being transacted in a way that's native to the internet, in the way that information has been, you know, for since, I don't know, the 1990s, I guess. And so it's been, to me, just like mind-blowing to see this evolution of the internet of value. And when you're using DeFi, you really get this sense of, this is how money is supposed to work on the internet. And so that kind of you know, parallel with Napster and music is, I think, really makes sense, because, right, like we already have gone through that evolution for information, for music, for movies, for I don't know, digital images, or social media. So that's kind of like, that's already being shared freely and globally. And so what we're seeing now is what happens when the same when developers are trying to do the same thing with money. Do you guys think it's fair for money to get a different, or like, or the same treatment than information? I mean, should there be kind of different laws in place? I mean,
philosophically,
is there a
no.
difference? Yeah.
Philosophically, no, but it's treated differently in practice because the stakes are higher and there's more to lose by entrenched industries that are, you know, very, very powerful and profitable. So I think there's just it's more disruptive when it comes to money, and it has more implications, not only on like a business level, but on a political level, and on like a macroeconomic level.
Yeah, like
so it's treated differently.
It's treated different. I mean, but should it be like, Ryan? What are your thoughts?
No, why should it be?
Yeah, I'm not really sure on that one. I'm kind of just watching and speculating.
Yeah, I don't know. What do you like, Emilia? What do you think would be the impact? And I'm taking these questions from the Q&A as well. The impact to DeFi if something like the travel rule in the US, so like the requirement for applications to disclose or to, I guess it's to gather information about their users. What would that do to DeFi? Is it feasible to have DeFi in a world where that is a requirement? You're muted. Emilia, you're muted.
Yes, sorry guys.
It's okay.
Yes, this is a very hard question. I mean, it's one of the questions that is probably more recurring, you know, on the crypto Twitter and everywhere. Like people talks about cryptocurrencies and DeFi. Like, would it DeFi really work if there would be this kind of enforcements? So first of all, the first thing is like, this is one of the reasons why before I was saying that DeFi like probably needs a new kind of different approach from compliance and legal perspective compared to traditional finance and fintech. Like, how do you enforce these kind of things on a decentralized protocol? How do you enforce these things on Uniswap? Where, okay, it's true there is Uniswap Labs, but Uniswap Labs, like, Uniswap kind of inherits the same censorship resistance of Ethereum, right? Like Uniswap is immutable. There are no controls anywhere on whatever is deployed on chain. The front end is out there. You can host your front end on your computer. Like there is no way of forbidding you that. Anyone can run a Uniswap front end, so the official one is not really needed, like to trade on Uniswap. So how do you enforce anything on Uniswap? So I think like if the protocol is truly decentralized in all the different aspects, then I don't think this can happen unless like a global ban on cryptocurrencies or whatever other that honestly I believe it's quite unlikely. But you know, I guess we will need to live and see what will happen. I hope that this is why I was saying before. I hope that actually the other side, this traditional finance and fintech, will see the potential in making finance actually more open and more accessible to everyone by using DeFi and blockchain and Ethereum. Therefore, kind of trying right now they are scared, if you will, right? They are scared. They don't understand. They really don't understand what's going on. So of course, like usually humans, when they are scared, they try to run away from what's happening, right? So I think it's also, as builders, as pioneers of the space, it's also our responsibility to try to bring this forward from a different perspective that will hopefully like bring different rules to actually apply to DeFi, rather than trying to enforce something on something that cannot be, on which cannot be enforced, like in the case of Uniswap, for example. Yeah.
I think it's a great point, because like one thing is what regulators would want to see, and the other thing is what regulators can actually enforce. And yeah, right now DeFi is moving, or at least you see it in every kind of protocols or projects roadmap, that the ultimate goal is full decentralization. So being run by a DAO, governance being decided on token holders. There's no headquarter. There's no kind of corporate organization. So nobody you can go after. User funds aren't custodied. So it becomes harder to regulate. Okay, so switching gears a little bit, because where these protocols are built is also a key part on how decentralized they can be, right? And so far, DeFi has effectively been built on Ethereum. I'm not sure TVL on Ethereum versus Binance Smart Chain or Solana or like other chains that have also attracted TVL, but most of value is still on Ethereum. Why do you think Ethereum has been hard to replace, and do you think that will be the case going forward? I mean, it's still obviously, you know, like I said, Ethereum is still kind of the place where DeFi is being built, but that kind of supremacy, if you can call it that, has already been eroded pretty quickly this year. So what does the space look like going forward? Multi-chain DeFi or one chain to rule them all? Like, how does this look like?
Me personally, I believe like that Ethereum has and will retain the leadership on mostly on the DeFi space, but essentially on everything. Like we have seen actually other solution like starting to pick up kind of on volume, for example, TEDs also regarding NFTs. But I still think that Ethereum has the strongest foundations in terms of decentralization and censorship resistance. Those foundations will actually be way stronger once we have the merge and proof of stake. I personally believe that proof of stake is way more censorship resistant than proof of work. We have been seeing with Bitcoin, like that the Chinese government, they actually had the ability to actually pinpoint all the different large-scale miners that were in China, and they had to relocate somewhere else, which of course, this shows how proof of work, especially with ASIC hardware, then it becomes like way easier to censor compared to something like where you don't even proof of work without ASIC resistant proof of work and or proof of stake, like it will be Ethereum in the future. Of course, there are a whole set of arguments against this reasoning, like the concentration of capital in the hands of the like the wealthy become wealthier and stuff. But on overall, I believe that the in terms of decentralization and censorship resistance, and also environmental impact and everything that we have been seeing these months, like the migration to proof of stake will actually mark the final lead of Ethereum on all the different blockchains. And then we have like rollups to scale to be able to actually onboard the next millions of users, which is still a very infant technology, but it's very promising. If you guys have been trying optimism, I have been personally working on Arbitrum, and it's amazing. Like I can give a quick comparison that deploying the Aave protocol on Ethereum with the current gas prices costs around $2,000, and on Arbitrum I spent like less than $50. So like the ratio cost opportunity ratio, and also the performance of the network, the ability to onboard more users, will become way better in the next future. So, but this doesn't mean that, like, I think like we have been seeing side chains like Polygon. Aave was one of the pioneers of onboarding users, like when there was the crazy gas prices of some months ago, like, and a lot of community members were complaining about like the inability to use the protocol anymore, because like a simple deposit transaction, or even worse, withdrawal transactions for users that maybe they deposited like small amount of stable coins, and they weren't able to actually take that amount back because of the high transaction fees. Then Aave pioneered that migration to Polygon, that went really well, and the protocol acquired a lot of new users, actually coming from mostly from other chains, like for example Binance Smart Chain and stuff. And that was really interesting, and that also helped the Aave community like to understand how to handle like high like performance network. Like it was a nice testing ground for what is yet to come, like rollups and other scaling solutions. So I still believe that although Ethereum will be dominant in this space for the foreseeable future, there will be for sure other chains that will actually work together with Ethereum to actually make the user experience even better and even easier in the future. Yeah.
Interesting that an Ethereum scaling solution was able to take users away from other layer ones. I didn't know that. So what do the others think? Like, do you guys think proof of stake plus rollups plus other scaling solutions on Ethereum will kind of be the final death blow to Ethereum killers, or no?
I think that Ethereum network effects are very hard to overcome. And I think that it's just this compounding effect where as each developer chooses to build on Ethereum, they make it more attractive for the next developer to also build on Ethereum. So that's why Ethereum has become so dominant and has built such a strong moat. And it's hard to see another chain actually totally like usurping Ethereum in its role, but I agree with Emilio with the idea that other chains will serve complementary purposes and perhaps help, you know, take on some certain types of computation that are not feasible on Ethereum. And, you know, maybe like a better way to handle that computation could be like on another blockchain that maybe is not as decentralized as Ethereum, but is not like a fully off-chain computation either.
Lex and Ryan, any thoughts on this?
Yeah, I think there's a lot of great sort of builder information that's been shared. You know, from our side at ConsenSys, you know, there's I've got guests. I'll pass the baton. I'll be back in 1 minute.
Sure.
Yeah, so yeah, I generally agree with you know, what Jeremy and Emilio were saying, that, you know, Ethereum definitely has the builders in the community, and I think, you know, they're still best positioned to you know, continue to kind of lead in the space. And I think, you know, just another aspect too, it's a lot of the growth on kind of some of the other competitors or Ethereum killers that have come out, so to speak, has, I think, largely been based to you know, high gas fees. And so if the proof of stake launch on Ethereum you know, successfully lowers those gas fees, what kind of other offerings are some of these other Ethereum killers, so to speak? You know, what are the other advantages? That being said as well, I also kind of I know for me personally, it's about, I don't think it has to be a one chain to kind of rule them all. I think it's all about in the space, you know, building on ramps to allow everyone to participate. So, you know, even just back to kind of compliance and the future of DeFi, if there are chains that maybe address some of the compliance or regulatory issues as we kind of solve those, and that can integrate as well, and we can find a way to bridge that into Ethereum or other protocols, I very much think there's a place in the ecosystem for them to play, and you know, to continue to bring more people into DeFi.
Sorry for hopping off before. There was a 4-year-old that had a very important thing that had to be addressed. You know, so to give a slightly qualitatively different answer, you know, for an effort to plug in, you know, something like Polygon or other layer 2s into MetaMask, it was really important for that ecosystem to be used by millions of people. You know, and similarly, one of the things that really benefited BSC, I think, is the fact that you've got this huge built-in audience inside of a crypto wallet that can just hop on and use an EVM-based financial services ecosystem. And I think there's more, and that's the tip of the spear. There's dozens of things like that. So for example, node infrastructure, you know, like Infura had plugged in Polygon as well, and for developers to build software on Polygon if they want to use, they don't want to spin up their own node but want help with that, and they can API into a third party and get their apps up and running, you know, and then there are lots of third-party services doing that as well. And then you get to developer libraries, whether that's Hardhat or Truffle or others, to get going on these things. And so the network effect is really quite, yes, there's the technical bits and the standards and Web3 being kind of EVM compatible and all that stuff, and what a token is. And I think that's really hard to break out of because that's already there. But then you know, where people are and pulling them out and creating new behaviors is really, really hard. And so, you know, the world that I hope we see is for Ethereum or whatever version thereof to be kind of the core trust layer, the foundation. And then it's going to be a multi-chain world that things plug into, but, you know, some chains are going to be larger and more performant and doing, let's say, more work that requires more decentralization, and then there are going to be chains that are more performant because they can do computation faster, or they can, they can handle file storage in some particular way or whatnot. But it's not sort of the outcome, I think, is going to have power laws, and the power laws today point to Ethereum.
So a pretty wide consensus here about Ethereum dominating and maybe other chains having a more specialized role on certain functions within this kind of broader financial ecosystem. We're getting to the final 10 minutes of the panel, and I feel like we need to address the crypto market. It's been kind of on a downturn. Today is another red day. So what would if we are kind of at the start of a new bear market in crypto, how does that affect DeFi at all? I think, to me, one advantage that DeFi has over kind of the rest of crypto is that it actually provides other use cases besides speculating on number go up. You can deposit stable coins and start earning interest. You can have like more passive strategies. You can invest on a basket of tokens on Balancer. And so to me, that seems like an advantage, and that maybe DeFi weathers kind of weather a bear market a bit better than crypto has in the past. But I mean, curious to know your thoughts. Like, first, are we headed to the crypto winter? And if so, how does DeFi fare? Ryan, I'll pick on you.
All right, I'll give it a go. Yeah, so I mean, a couple of thoughts there. Like, I guess first, just like looking at the last year, I mean, especially in DeFi sector, we're up like 2,000% in total value locked. So it's very hard for me, just thinking of that metric in mind and just how much incredible growth and innovation we've had in the space, that that we're actually entering into a bear market. I think another thing is really, and you kind of mentioned this, volatility is kind of good for the space as well, and some of these different products. And it's because in DeFi, you have, it's not just people speculating on price, or you actually have people that are lending, and that creates a certain behavior when the price goes up or down, or the interest rates go up and down. So it can create a lot of transactions, and really, some of the use cases for the tools that people have built in these protocols can really use and be shine now. And I guess kind of my last thought on it is, we're kind of entering into like the later part of summer. Some of the restrictions around the globe with, travel bans and different things are kind of freeing up, and, people are a bit like ready for vacation mode. And so to kind of see the markets, taper off around this time of year every year is kind of like a normal thing. So I'd like to be optimistic and think that, we're going to see a lot more movements, and the markets kind of rebound towards the end of summer here. But either way, I think overall that we've been having a great run for this past year.
Jeremy?
I've always held a long-term outlook on crypto and DeFi. I try not to get caught up too much in the short-term cycles, and I think that bull and bear markets both present their own unique opportunities. Bull markets bring opportunities to capture a lot of growth and capture a lot of interest, and like, hopefully, when you're a builder in the space, like, have your product in a place where it's ready to receive and to accommodate that influx. And bear markets are an opportunity to build with less distractions, and to make real progress, and have a lot of focus on board. So whether it's one or the other, I think from the perspective of a builder and from a long-term investor, and someone who's very dedicated to the space, whichever one it is will be good, actually. there's positives to gain from each one. And I can't predict what the hell the market is going to do in the short term, but the good news is that I don't need to. I can react to it, and I can, respond in the appropriate way and make the best out of it.
For sure. I mean, yeah, it's interesting that I don't think DeFi has ever lived through an actual bear market. Like, DeFi was built in a bear market. I mean, if we consider kind of the start of DeFi, Maker releasing DAI end of 2017, and then Aave, Compound, all of that was built, 2018, 2019. And that was through kind of the latest bear market. So we haven't really seen kind of this more mature version of DeFi in a setting where, prices are going down. So will definitely be interesting to see. Emilio or Lex, thoughts on this?
Yeah, actually, for me, it's pretty interesting because I joined Aave when it was still called Itlen in beginning of 2018. And actually, I always like to remember that, because when I started, actually, we already had, like in 2017, Itlen, now Aave already had a DeFi protocol. Like, you could collateralize your assets on Itlen, like even though it was a peer-to-peer way of doing that. You could get supplied liquidity that you could use on the exact same way you would use Aave or Compound today. And so I actually saw what was the impact of the bear market on that product, even though, of course, the scale of the market was completely different. Like, we are talking today about tens of billions, while back in the days, like, probably the whole crypto market was not even close to that. So but it was really, I still believe that we as Aave team, and me personally, I collected some information back in the days that will be useful if I don't consider the current one a bear market. Like, when we still have Ethereum around $2,000, I don't think that this is a bear market, honestly. But if bear market really comes, I think that like the current state, if something along the line of end of 2017, beginning of 2018 really comes, I think that the market is completely different right now. There are tools, like in 2017, there were a lot of white papers and very little to actually show for. Right now, there are usable products. There is easy onboarding and offboarding for crypto. There are stable coins, so you don't even need actually to onboard or offboard. Things that in 2017 were not even yet in production ready, So I think if a real bear market comes, DeFi will easily survive. Most likely, of course, like, we are gonna see a contraction in, like, probably protocol revenues, TVL, whatever other metrics people like to use to evaluate DeFi protocols, but that is inevitable when the price of the assets drop for a significant amount. But I still think that, like, the DeFi space, although it will be impacted, it will not, like, DeFi is not a bubble. I don't think DeFi is a bubble. DeFi is here to stay and to evolve in the future. Yeah,
I agree. Lex?
Yeah, thank you for I feel like I have to have a big bang. This is a market question, and so I think there's a secular change question, which is, will the software from DeFi take 20% of the GDP over some secular amount of time? And the answer is yes. The way we have electricity now, we're going to have decentralized programmable blockchains run most of our economic software at the end. It's almost like it's not even to me, that's not even a controversial question anymore. That's how self-radicalized I am. But then the bear market, like, I mean, just look at the chart. It's we had a peak and then the thing is down, right? So sort of there's no point cloaking it. And the broader context is, are we in a risk on or a risk off investing environment more generally? And that's also sideways. I would have said we should be risk off for a long time now, but everything keeps going up, and everything keeps going up. You have asset inflation because of the continued expansionary policy in the States, both monetary policy as well as the fiscal policy. So you've got interest rates as low as ever, forever and ever, and you've got now another however many trillion being injected, and you've got however many trillion being distributed. And so that flows into asset classes that people can relate to, which is why you've got YOLO Robinhood outcomes, and you've got crypto assets kind of being the risk on asset of choice. But there is a theatrical nature to that and an artifice. And so I'm just, it's an uncomfortable thing to rest on. Like, to have the foundation of your global transformation of magical software rest on the fact that other people are making mistakes, or, it feels very swampy. So I'm pretty anxious about the environment going to risk off. I think it's possible. And if it does, what that means is rotation out of risk assets, which are equities and Bitcoin and crypto. Not because crypto is not fantastic and doing well, but simply because it'll be an ATM to fund people's cash needs. So I think everybody who is building and investing in the space should think about their treasuries thoughtfully, and should diversify and not make the mistakes of 2017 when preparing for their own longevity.
100%. Yep. The good thing is, like, as we mentioned, there are places to diversify now in crypto, which I think were harder to come by before. Stable coins, lending, even if those interest rates keep coming down, as there's just less money to be made in crypto, you can still get some yield on your savings. So yeah, the plus side is DeFi will I think at least will keep growing. Builders in this space built it during the bear market, so they'll keep building it even if there's another bear market. I think we kind of all agree on. Well, we've come to the end of the panel. Unfortunately, I couldn't get to all the questions, but thanks everyone for joining and participating. And most of all, thanks to the wonderful panelists for such an interesting discussion. And thanks again, Crypto Compare, for the awesome event. Bye, everyone.
Thanks, everyone.